Hi, and good afternoon. We're just going to pause just for a second because the attendees are all entering the room. So we'll just give that a second to catch up. Okay, and it looks like that number has stabilized. Maybe I'll just give it another couple of seconds. All right, so we are landing, right now there's 87 of you, or 88, so that's really impressive. I'd like to thank everybody that has showed up, and I know we're all raring to go and get started with payroll tax. So I'm Megan Nesbitt, I'm the president of Abacus. Abacus has just entered our 14th year of business. We have an amazing team of 11 people. We work primarily with local businesses on bookkeeping and accounting. We also work with business owners and decision makers on operational advisory. So looking at your systems, your processes, your people. And as of 2020, we are now offering tech advisory services. So for example, how to move your business to the cloud, which I'm sure many of us had to do some serious thinking about in 2020. And I'm also proud to report that Abacus have actually just won our 6th Product and Services Award for Best Accounting Services. So I think there's quite a few of my team members who are on here, so I just want to thank them for all the hard work that they put in that produced that fruit. So Abacus spend a lot of time doing payroll and payroll tax, and we work really closely with the BEDC. So this offering of this free webinar seemed very timely and useful. The vast majority of the information that I'm going to share today is actually copied directly from the Office of the Tax Commissioner's website. So we are going to work through the basics of tax with you, but we really encourage you to develop a relationship with the Office of the Tax Commissioner, or the OTC as we affectionately refer to them, because we've always found them to be really easy to work with, and they are who actually provide the information that allow us to get it right. Housekeeping, we are going to send the slides out to participants. So with that in mind, I'm not actually just going to read all of the content that's on the slides. There is a lot of information to get through, and I want to make sure I spend the majority of my time on the actual calculation and use of the portal rather than getting lost in the encyclopedia of knowledge that is tax. I also, housekeeping there, I will have 3 question sections. So if you have a question, please put it in the chat box, which is in the control panel on the GoToWebinar, and we'll address it when we stop for questions. Just as an FYI, the resources for everything that you're about to see is the Office of the Tax Commissioner's website and their guidance notes and or the legislation, which is also available online at Bermuda Laws. And I'm hoping that the time we spend today allows you to not have to spend time with that specific legislation. So we can get started here, and just make sure, there we go. So our agenda today, again, I'm not just going to read the slide, but these are the things that we are going to cover. And it does say Q&A at the end, but there are 2 other, as I said just a second ago, there are 2 other sections where I will pause to get some questions in if you have them. So just at the beginning, when should a business register? And if anybody tuned in to the Mind Your Business radio show, Jamila had asked a really good question around when a business should register with the Office of the Tax Commissioner. We did reach out to them, and they did indicate that it is actually, as indicated on their website, when a business commences. So if you are in the process of getting set up and you're not actually earning revenue, you should still register with them. But that you would file a nil return with them. That basically indicates that you have not, even though your business is in operation, you haven't started generating revenue yet. It is a criminal offense to fail to register, and I think that one of the impacts of the 2020 COVID crisis was really felt by business owners when the government unemployment subsidy was tied to, and some of the relief measures was also tied to the concept that employers were meant to be current with both their social insurance and payroll tax filings. So we've seen a big uptick of business owners who then are realizing that they are supposed to be registered and wanting to get it right. And those are the people we're looking to work with, and hope that you get some good information from here. So the registration link for registering a payroll tax account is actually found on the the Office of the Tax Commissioner's website. And the link is registering, changing, or closing a tax account. And I will actually just pop up the relevant, no, I won't, hold on. There is a link. So if you actually just Google payroll tax, I'm sorry, I've got two screens. If you just Google payroll tax Bermuda, it'll take you to the Office of the Tax Commissioner's website. And actually I will pop this over here. And on the right-hand side, there is a really good section for resources, which is again where a lot of the information that we're working through today is coming from. So to register, you can find that link to the registration form right on their website. So remuneration is what is included on your tax return. So, and again, I'm not going to read the whole thing, but it is essentially wages, salaries, benefits, cash of any kind, or things that are paid on behalf of. So that's the other thing to be aware of, is either what you are getting from your business or giving to your employees and paying for things on their behalf. So for example, if you are paying some of their benefits, you're paying their portion of the health insurance, or you're paying their portion of social insurance, et cetera, that portion that you're paying on their behalf is taxable. Not the employer portion that you are liable to pay, but anything that you then elect to pay that essentially puts more money in the employee's pocket is taxable. The other piece to sort of talk about here, self-employed and deemed people or employees. I think self-employed is a fairly logical definition, but a deemed employee is anyone who provides a service to an entity and who shares indirectly or directly in the profits of that entity. So the guidance notes indicates lawyers, accountants, medical practitioners that work for and also share in the profits of their business. The other good example of this is directors. Directors' fees are taxable. The guidance notes go over very specifically what items are taxable. Probably not surprising to everybody, there's very little that isn't taxable. The notes also go into great detail on what is considered avoidance. Doing loans to employees that are really compensation, or doing loans to yourself as a business owner that are really an owner's draw is avoidance. Making payments to family members or peripheral people that don't have any commercial substance to avoid tax is tax avoidance. Also, it is, if you are paying your personal expenses through your business, that is compensation. Your company is paying something on your behalf. So you want to also be aware that that should also be part of your remuneration, and to not include that in your tax return is considered avoidance from the tax commissioner's office. So then remuneration is capped at $900,000 per annum per person. And if that's applicable and you want more information about that, you feel free to reach out. Dividends are also not included on this slide, but dividends are also taxable. So effective April 1st, 2018, the government introduced legislation to include dividends in taxable remuneration. So if a dividend is paid to a deemed employee, which is an actual employee, or a deemed employee who would be a shareholder, then it is now taxable for local companies. So just to be clear that that's not exempt, companies are exempt from the dividend clause. For local companies, when a dividend is paid to a deemed employee, it's taxable. However, there is a $10,000 per year per shareholder tax exemption. The guidance notes also go into great depth as well about avoidance in this area. So if your company has a structure where dividends are paid to other companies or to trusts, I would strongly encourage you to get some legal input on when or if tax should be paid. And then foreign contractors and subcontractors who are working in Bermuda, who are not registered for their own companies, must also pay payroll tax. So if you have a subcontractor, for example, Abacus, who has a company who has a legitimate payroll tax ID, that is not, there would not be tax on fees paid to us. However, if someone hired someone who doesn't have their own company and who is not paying payroll tax to do work that is fundamentally in the business that they're in. You want to be careful about that, because if you would be liable for tax on fees paid to that person. What else? And then they're also, with effect from April 1st, 2018, taxi drivers are now in a separate category. They're required to register with the Office of the Tax Commissioner, and they pay tax quarterly. So that also happens at point of license. I'll pause briefly here to see if there's any questions just on the quick discussion we just had. And I don't see anything in the chat box, so that's good. Hopefully that's a reflection of either being overwhelmed by information already or I'm doing a great job. Exemptions. So these are general exemptions, kind of for all companies. So a person's not considered an employee if they're under 16 years of age, or are employed by an employer for 16 hours or less in each month of a tax period, but that does not apply to self-employed people. Students on student holidays are not subject to tax. Bermudian employees on training schemes that have been approved by the National Training Board also have an exemption. There's no tax for employees who care for people with physical or mental disabilities. Again, that's an exemption you have to apply for from the OTC. And then employer contributions to approved health, life, and pension schemes are also exempt. So this is where I was saying the employer portion of pension, health, and life insurance are not taxable. Just to reiterate what I said, though, if the employer then chooses to pay the employee portion, that portion is taxable. Okay, so getting into the meat of this thing, that there are two components of the calculation, and this is not new. This has always been the case, that there is an employee portion, which you are allowed to withhold from staff, and I'm doing this backwards actually, so I'll start. The employer portion, which is your obligation. Sorry, I'm just seeing that there are questions. Let me stop. So there are questions, and I'm going to try and figure out how I can get to them. Here, give me 1 sec. Okay, would we be getting the slide deck after the call? Yes. We are doing that. Deshaun, I'm sorry, the question box is really small. Are you able to tell me how to make that bigger?
On the right side of where the questions are, there's a little square with an arrow. You can click that to enlarge it.
You are the best. Okay, there it is. Okay, good. So will we be getting the slide deck after this call? Absolutely. What if the contractor is not in Bermuda? That's a great question. So the just to go back to that slide, it is results of services provided in Bermuda. So if there is a contractor doing work outside of Bermuda, that is not subject to tax. What about students who are here working ad hoc due to being home from COVID, i.e. still in school, so not summer vacation or weekend? That's also a good question. And I think that actually is sort of similar to having kind of students who are at Bermuda College. So the way the wording of the, let me go back to that slide. The way this is worded, that's an exemptions, is that students on weekends or vacation employment are excluded. So if you have a student who's working consistently throughout the year around courses, that's not exempt. The work that they would do on the weekends or for their winter or summer holidays is where they are considered a student, and their work would not be taxable. What about virtual assistants overseas? I think that's the same question. So taxes only applied to work that is actually done in Bermuda. Job creation exemptions apply to local companies with a total payroll between one. Yep. So I hadn't quite gotten to new hire exemptions, but that's actually, I can speak to that now. So there are also, actually, I'll hold off on that one because that is going to get spoken to in a slide. I think it's about 3 from now. And In reference to registration, at one point, the TCO indicated they didn't want people registering too early in case the business was considered a hobby. So as soon as a business is making money or is intended to make money, they should register. That's also a great question. So that's the question that I did ask the tax commissioner. And so it is when business commences. So if you are thinking about a business and you're putting some things in place and you do a business plan, that's not the commencement of your business. But the minute you start offering product and services, that would be when business commences. How is payroll tax calculated for business owners who are not yet drawing a salary from the business? We're going to hold off on that one for just a minute. There's some nice comments here. Thank you for everybody giving me nice comments. Directors' fees are taxable for everyone or just who are resident in Bermuda? Oh dear. That is a great question. And I'm actually going to make a note of that one because I anecdotally work with a company where all directors' fees are taxable regardless of whether they're here, but then that does sort of seem to vary from the wording around services provided in Bermuda. So that is a great question. Not in Bermuda. That is a great question, and I will figure that one out, and we'll send that out to people out there. Can you go over a deemed employee again? Nothing would make me happier. So hold on one second, let me find my notes. So a deemed employee, I'm just going to read this because it means I will get it right. A deemed employee is anyone who provides services to an entity and also shares directly or indirectly in the profits of that entity. So that is usually a shareholder who is also a director. If there is then a dividend paid, that would be taxable because those people are providing services to the company. If there is a deemed employee can also be someone who's not drawing a salary per se. So a business owner who isn't necessarily drawing a salary, but who then is sharing in the profits. So as the company makes money, they're taking money out of the business. That is a deemed employee. Trying to think of other examples. So if that's not clear, please ask again and we'll see if you have a specific example of someone you're wondering if they're a deemed employee, I'd be happy to have a think about your specific question. Okay. Sorry, and I don't know if these are in order. So I needed a merchant account. Where are we here? I've lost the question, sorry. Bank won't give you a merchant account without being tax registered, but I needed a merchant account for e-commerce, so I had to register right away before even starting. Yeah, and I think that's a good point, but I think also, and I guess this is the question around what the definition of what is business commencing. So I think if you are actually, it's a great question. So launching the business, I think is contrary to what I just said around when you're actually offering product and services. I think it is when your business officially starts. And I guess that's a funny definition, and I don't have a better one because that's literally what business commences is what it says on the Office of the Tax Commissioner's website. I think to go back to the other commenter's point is that if you're, again, if the idea is, if you have an idea about a business, but you haven't actually put things into play like a business bank account, a merchant account, things that are actually in line with starting a business, then I think that would be the differentiator between the two. You know, and honestly, at the end of the day, if you have a question around where that point is, the Office of the Tax Commissioner is probably really the best resource to tell you exactly what point they want you to register. Because I'm also aware that they don't really like when businesses register and then file no returns. So there's kind of that communication with them around when the most appropriate time to register will be. There's lots of questions. This is exciting. Are there any exemptions for approved pension and health insurance contributions for self-employed persons? So for a self-employed person, this is a funny one because what you have to do is you have to think of yourself like you're the employer, and therefore I have to give my employee, who is also you, a benefit. And so half of the health insurance premium would be taxable, half of the pension if the business is paying this on your behalf. So if you as the employee or employee and owner are drawing a salary and you're doing health insurance deductions, pension deductions, social insurance deductions, then there wouldn't be any tax on the employer portion. If your company is paying your portion of the health, social insurance, et cetera, then that portion, and again, you as the employee, is taxable. Can you go over subcontractor taxable items? So really a subcontractor taxable item would be the same as, if I'm understanding the question correctly, so if I don't answer the question correctly, please let me know. It would be the same as for an employee. In terms of remuneration, it would be anything paid to that person for service, unless that subcontractor is not in Bermuda and does not have, it would not be taxable if they were not in Bermuda. It would also not be taxable if they had their own company. So if you have contracted a company or a business that has their own tax ID number, then fees paid to that contractor would not be taxable. I'm also realizing that I've just read all the questions in opposite order, so I'm just going to flip back and see if there are more nice comments in the chat box, so thank you. Okay, so I think I covered all of these. So we're going to flip back to our deck slide and get into the actual calculation, which is, I suspect, a lot of what you guys are here for. Give me 1 second. Tax is drying. So what are the two components of payroll tax calculation? And again, this has been this way for a long time. The way we calculate this has changed, but the two components remain the same. Employer portion, and the tax rate for each employer depends on where the total remuneration for your company falls. So, and we'll get into the rates right after this, so we'll go through those. So there's the employer portion based on total remuneration, and then there's the employee portion, which is based on each employee's remuneration. And that rate is a marginal progressive rate, which we'll get into that in way more detail than anybody wants to in a sec as well. And so those two amounts combined, the portion that the employer is liable for and the portion that the employee is liable for, you can withhold that amount from the employee together is what then gets paid on to the tax commissioner. I do also want to point out that the tax year follows the government fiscal year, which is April 1st to March 31st. So that's kind of an important thing to note as we are thinking about annual remuneration and employee remuneration when we get into these calculations, that again, we want to think about this on a April 1st to March 31st year. Okay. I'm really not going to read the next few slides because these are the rates that are pulled directly off the Office of the Tax Commissioner's website. But the employer portion, the piece I did want to spend a little bit of time on is the zero, where there are specific exemptions for where there are specific payroll tax exemptions that we didn't speak about a second ago. And I'm just making the note around new hires because I did want to speak to that, because that's where we are talking about that here. So there's certain organizations that always get a 0% tax rate. So there's charities, cultural organizations, et cetera. There are also, for new startup businesses, there has been a 4-quarter tax exemption provided. And then also, if you are an employer in an economic empowerment zone, you get 9 quarters of tax exemption. There are very specific rules around that, and that application to get that exemption must be done through the BEDC. And I think their forms are all on their website, but I'll confirm that as well. Forms or exemptions. And the BEDC are fantastic about working with business owners, you know, to get the paperwork filled out and get the proper exemptions. And so the government has really put an emphasis on trying to assist new business startups and the economic empowerment zone. We'll talk some more about some of the other concessions in a sec. Yeah, so anybody who's applying for those concessions needs to be registered with the OTC, and that application is done via the BEDC. These are a lot of letters. there is also this new hire remuneration, excluding dividend and bonus payments paid to employees in new hire remuneration and remuneration excluding dividend and bonus payments paid to employees in special situations, persons in jury duty with the Bermuda Regiment Volunteer Reserve, and then some other things. So new hire remuneration there is a baseline that the government, and I'd be completely honest, I don't remember what the date is at this point, but there is a baseline date that the government says, okay, at this date, you had a certain amount of employees. In future tax returns, if you have hired net new, and I'll explain what that means in a second, people, you can actually get an exemption on those new hires. So what I mean by net new is if you started with 4 people and you let 2 people go and you hired a person, you're going to end up with 3 people. You haven't actually created an additional job. You've just cycled some people through your company. But if your baseline is 4 people and at the end of a sustained period you have 5 people, that additional role is subject to tax exemption. The other thing I wanted to mention here is that retail, and I'm doing this backwards, restaurants from November to March consistently get the employer portion for tax relief. And actually, due to COVID, the restaurant relief has also been extended. So you want to really make sure, A, that you're registered correctly, because if you're not registered as a restaurant, you are a restaurant, you're not going to get that exemption. And then understanding when how to file that exemption, because you still need to file your employee portion. It is just the employer portion that is exempt. And the retail employees, consistently, there is from January to March a retail concession of 0% as well. So, okay. Yeah, and so that's the employer portion at 0, which is a nice concession. So then this next slide, which again, we are going to send these out, indicates kind of the annual payrolls and what then band the company will fall in. And again, this is the employer portion. So when it's talking about annual payroll of less than 200,000, it's all of your employees combined total remuneration. And so what was exciting for me in this last tax year, the government has actually introduced 2 new bands of tax. So previously there was the 1.75, and then the next band up was 7%, which was quite a large jump. But the government's actually included now a 3.5% band for remuneration between 200 and 350,000 annually, and 6.5 for annual of 350 to 500. So that's something new that's happening. Similarly, if you have a retail establishment, and this is very specific, with annual remuneration over 500,000, whose primary business is fashion, shoes, jewelry, and perfume, you get your own rate. So really understanding kind of, A, if you have a industry exemption is really important, and then B, understanding where you're going to fall in terms of the rates will really help you to plan. Actually, before I get into the, good news, that's before I get to the employee portion, one of the questions that comes up pretty often is, I filed my tax return in the first quarter, and my total remuneration was less than 50,000, and so I was in the 1.75 tax band. But then in Q2, something happened, I paid bonuses, something happened, and my remuneration was, say 53,000, which on an annual basis would push that company into the next band of 3.5%. What happens when my company is kind of shifting between tax bands? And so what we've encouraged people to do is to have a think around where your anticipated annual is going to fall. So if your normal quarterly remuneration is 40K, and in Q2 you ended up paying 52, the combined 2 quarters of 92 is still putting you on track to be less than 200,000 for the the total year. And so what we would encourage you to do is do a manual return for Q2, filing at the lower tax rate, but with support sent to the Office of the Tax Commissioner on the annual remuneration that you're expecting and why you're submitting a return for the lower amount. Okay, so the employer portion tends to be, and I know tax is not always straightforward, but this tends to be the more straightforward portion of the calculation. So I paid out $40,000 to all of my staff. I fall in a certain band, I pay that rate. Where this gets tricky is the employee portion. The way the tax is set up right now is the employee portion is marginal and progressive, which means that the rate of tax that employees incur on each additional dollar of earnings is what sets the tax rate. So as earnings rise, each dollar is taxed at a higher rate. It would be nice and easy if someone who earned between, let's say somebody is earning $75,000, if there was just the one rate of 8.5, but that's not how the current system works. Is the current system, and I'm going to speak really confusingly, but bear with me because the next slide says good news. Wait for the good news. But you need to understand how complicated it is before we can kind of give you the light at the end of the tunnel. So if someone's making, and it does require for each calculation for the business owner to anticipate what the annual earnings of the person is. So if annually an employee is going to earn less than $48,000, this is a straightforward calculation. That employee's tax deduction will only be 2%. If that employee is going to earn $50,000, then we need to anticipate, again, that they're going to be earning $50,000 and calculate the first 48 at 2%, the next 2,000 at 8.5% to come up with the annual rate to back into the first payment deduction, and then rinse and repeat, and it gets more complicated with every iteration of that. Further, if anything happens to change the anticipated annual, a bonus, unpaid leave, somebody starts or finishes throughout the year, you have to recalculate the anticipated annual and adjust the tax. And the tax commissioner has been very clear that it is really important to get the tax right at point of deduction. That where I have seen some people who are doing tax deductions and they say, okay, well, I'll just true it up at the end of the quarter. That's not the intent of the tax commissioner. The tax commissioner is really encouraging business owners to deduct tax correctly along the way. So, good news. There are calculators that assist with this, and I'm actually going to spend some time on that because that has changed. I can't even explain the way we work. You know, I tell the anecdote all the time of sitting in one of the information sessions that the Office of the Tax Commissioner did when this all came out, and I had just this horrible sinking feeling on how on earth are we going to do this. And then when the tax calculators came out, really appreciating the time and effort that went into them because they do make such a difference in terms of getting it right. So the tax calculator is found, I'm just going to flip this over here. On the Office of the Tax Commissioner's website, there is a section over under resources for calculating payroll tax for the period, sorry, the sun is right on my screen here, for the period April 1st, 2020 to March 31st, 2021. So if we follow that link and similarly go down to resources, the calculators are all here. There are different calculators for different frequency of pay. And I just want to spend one quick minute on frequency of pay. So weekly is very straightforward, monthly is straightforward. Just be clear that bi-weekly is every 2 weeks, semi-monthly is getting paid twice a month. And there is a difference. So bi-weekly means you get paid 26 times a year. Semi-monthly means you get paid 24 times a year. And there's a different, the calculation would be different for both of those people. So you want to be able to select the calculator that's appropriate and download it. I feel like I'm in a cooking show because I just coincidentally already have one downloaded that we can just have a quick look at. So when you download this thing, it's a little bit intimidating at first. So what we want to do is just spend a couple of minutes going through how to use this. Again, we need to bear in mind that we are just finishing Q3 of the tax year. So we also need to make sure that if we are not using these calculators, that when we do start using them, we actually have to go back and put in information from April in order for the calculation to be right. So the three main tabs that we're going to use is input, monthly, sorry, I'm on the weekly calculator. So input, weekly output, and then quarterly output. And we'll get to the other two first. We're going to start on input. And sorry, I just want to come here. Okay. So we've downloaded the appropriate calculator, and in our instance, it's going to be a weekly calculator. So the important fields that are on here are the first pay period start date, and this is the beginning of the week that is then going to be paid. And I think that'll make more sense when we talk through the current week end date. So the week end date is referring to the date that your employees are paid. So if their first pay date was Wednesday, you pay on Wednesday, April 1st, that pay week started on Thursday, the 26th of March. So I usually find it easier to establish what my first end date is and back into my start date, but whatever works for you. So let's just assume this is right, but you can change these. So if I was to say that my pay date was actually, I want that to be the Friday, then I would set this forward to Saturday, and then this would allow me to say, okay, my first pay date is April 3rd. So once this start date is set, that you've established your first pay date in April, you don't need to change that start date. Again, that is now fixed, ready to work. The end date will change as you use this calculator. So assuming we are actually entering in information in April, that would be right. If we have already entered our information in April and we are now working on December, if by changing this end date, it opens up the columns and allows you to input information. I'll come back to that in a sec, because that changing this date has some impact on the other tabs as well, and it doesn't change any of the calculation, but it changes the view of what you're seeing. So we're gonna leave our start date there. We are gonna put some information in here through December. Staff number is not a required field, but staff name is, and it does require this to be unique. So if I put Megan and then I put Megan again, it's going to give me an error because it's looking for some sort of unique identifier. So if I then change that to Megan Nesbitt, it says, okay, these are now unique. When you are setting the calculator up, so I'm just going to flip back to our example of, hypothetically, we're in April and my first pay date was April 3rd, and I'm setting this thing up right at the beginning of the year, or now for your new usage. This start date, and it does tell you this here, is either the first period start date or their actual start date, whichever is later. So if these employees were already on payroll as of the first pay date, you're actually going to use that same date as their start date. You don't have to, you wouldn't put in their original start date. However, if they start anytime after the 28th of March, you would use that as their start date. So let's just say that I hire another employee on April 10th. So that is then the date that I will use as the start date. So it's either the date of start, this date, or their actual start date, whichever is later. If there is nothing populated in this column, no calculation will happen. So if I neglect to put something here, and I'll show you what that looks like in a sec, it will not appear on, the numbers will not flow through to the other tabs. So this is actually a really important field. The other important field, if somebody leaves, is to put their employment end date. And I'll cover that in a little bit of a sec in terms of the ongoing. So I just want to focus on the setup for a sec. So then here we are on the first pay period, and I need to establish what is recurring and what is one time. And generally, this is fairly straightforward. So recurring is weekly wages. If we were in the monthly calculator, it would be monthly salary. Those are things that recur. And we would be able to say, okay, I can take this person's recurring amount and multiply it by, in this case, we're in the weekly calculator 52, and figure out what this person's going to make annually. You don't physically have to or manually have to do that calculation, but that's what this calculator is actually doing. So it is looking to understand what you are paying the staff that is going to recur. If there is something that is paid one time, it is something like a bonus. It is what it sounds like. It's paid one time. So when the calculator is anticipating, okay, I'm trying to figure out what this person is getting paid annually, it's going to take your recurring and multiply it by the appropriate amount of periods, and then it's going to add this one-time payment to it. So if someone is earning, let's say, $2,000 a week, which seems kind of high, but let's just do it anyway. The calculator is going to take that 2,000 and multiply it by 52. I think I'm having a hard time paying somebody that much. Anyway, I'm sure it's fine. And then a one-time, let's just say they got a bonus. We'll look at the impact of that. And let's just say this person earns a little less, and then this person earns a little less, and neither of them got a bonus. Ongoing. Once you set this up, save this workbook. That's very important. When we first got these workbooks, I actually thought you had to save a separate one for every single pay period. You do not, because where I was saying a little while ago about changing this end date, you can change the end date to have the view of what happened on a particular pay period. So if we skip forward into April, and I'm going to just copy these amounts over just so we can have a look at what's happening here. We'll go to the end of June. I'll just look at this one quarter. And for argument's sake, let's say that this person finished on June 23rd. So I am going to put an end date in there so that we can just have a look at what that impact looks like. So save your workbook, know where you saved it, update this for each pay period. So as I said, we started here on April 1st. This is what these people got paid. Changing this date, and I think you've probably already clued into this, so sorry if I'm stating the obvious. Changing this week end date changes the view of how many columns you're going to see on this calculator. So if I wanted to go back and see what happened on a particular week, all I would need to do is change it to that date. It then, oops, too far, much too far. What have I done here? Okay, sorry. It then changes. I'm not sure why the view. It basically just closes off the calculator for future periods. What it also does, so on an ongoing basis, you would open your saved calculator. You would come in here to the input tab. You would put in your new information. So let's say we're now on the 22nd. I come in, I put in my new information for the 22nd. And I make sure that nobody started or finished. If I then go to the weekly output tab, it's going to show me the weekly deductions for each of those staff members for that particular week. This is really helpful as you're preparing your payroll, so that you're making sure you're getting your deductions right for each pay period. If I come back to this input tab, and say, okay, I need to look back in time and I'd like to know what the deductions should have been on April 3rd. If I change this date to April 3rd and then look at that weekly output, again, it changes the view on the 3rd and tells you what those deductions should have been. I am going to I'm going to power through the quarterly output, and then I'll stop for questions because I feel like this is really important here. So on the quarterly output tab, what this is doing is summing everything that's been entered by quarter from the input tab. So when we look, you'll see that this is flowing through the names that we've put in there, the total earnings for that quarter, and their total deductions for that quarter. I have totally told a little lie. I'm going to change this back to the end of May. Right, sorry, it changes the view. I said it did, I've just proved it. So there we go. I just forgot to change it back. So along the way, you can see the cumulative impact, but the date that you're picking again on the input tab will change the amounts that you're going to see flow through on the quarterly output tab. This quarterly output tab is really powerful because this is actually the information that gets included on your tax return. So if you spend the time to set your calculator up and use it on a regular basis, your tax return on a quarterly basis becomes much easier because this is the box that everybody struggles with is already filled out for you. And again, it gives you a nice summary view. So I find this really, really helpful. Just to go back, just to prove what I was saying, is if I don't have a start date on the input tab, when I go to the quarterly output tab, nothing is going to come through. So that is one of the things to keep an eye out for. Inclusion of an end date means the calculation stops. If you don't put an end date in there, it does sort of anticipate that you're going to pay this person again at some point. So you want to make sure that you're keeping this up to date as you go. This calculator does go all the way through the end of the tax year, so it will go all the way through there. And again, as you populate it, you would then see the quarterly. These are going to show in red because there's no information in there, and so it's telling me that we've taken too much money, but we're going to ignore that for now. But as you populate the calculator, it will populate, here's your first tax quarter, here's your second tax quarter, and again, there would be a summary of people down here, your third tax quarter, and your fourth tax quarter. The only thing that trips people up a little bit sometimes is this year-to-date line. Just to be aware that in Q1, your tax employee portion is this amount. So year-to-date, you're here. As the calculator gets populated and this quarter number changes, this year-to-date number will be the two numbers combined. So people often look and read this and say, oh my gosh, I've got to pay this much tax. Just make sure you're looking at the right line. The other important thing is that this also helps with your employer portion when you go to do your tax filing, because here's your total remuneration paid to staff. So again, we just find this invaluable. So I'm going to take another sip of water and I'm going to go to the question bar again and see what else we have here. So and guys, I'm also noticing not all of them are questions. I'm trying to look at the time and there's like a couple of, maybe I'll do it that way. So I thought it was showing me in time, but then I'm realizing that there's some that came in at 1:19, which is between 12:47 and 12:49, which doesn't make any sense to me. So I'll just try and make sure I answer all of the questions. Are the new tax bands for the fiscal year or starting April 21st? So great question. Generally, when there are changes, they they come into effect in April. So right now, for January to March, we would still be using all of, not January, March, for October to December, which is what we're filing now, and January to March, we're still in the the tax year started April 1, 2020. I don't realize that it's 2021 already. So the tax rates will not be changing for this quarter. Generally, when they change, they're announced at the budget, which happens usually in the beginning of the year. So I think in March is when that happens. And then they would be in effect for April 1st. As a part-time self-employed person who works flexibly, i.e. some weeks more than 15 hours, sometimes less, do the weeks with less have to be included in the calculation? That is a good question. So I think as a self-employed person, there is no exemption for that 16 hours. So pretty much anything you pay yourself is actually taxable. I answered that one. Commission only, how is that calculated? What we would do with commission is, and I sort of want to say it depends, because if there's any sort of guaranteed amount, it would be considered recurring. But if it is possible that it depends on the commission. So I think the guidance that we got from the tax commissioner is that the commissions are considered one-off. And I will confirm that just to make sure we're on the safe side. Ultimately, just also to talk myself through this, with commissions, if you consider them recurring or one-off, as long as that person stays for the year, the tax will actually come out to be the same. So the calculation will get there. It just means the deductions would be different. So if somebody is commission only, I'm just talking myself through this, sorry, and they are going to be paid a commission every week. I'm personal opinion, I would classify those as recurring. If it's a more sporadic commission, so if, for example, you are selling houses and you only get paid commission, every time you sell a house, and that might be 3 times a year, I would consider that more of a one-off and record those as one-off as they happen. These are good questions, though. Employees who care for seniors are payroll tax exempt. What if the employee works for a company? Is the company payroll tax free for caregivers? Yes. So just to go back to that. Oh, that was in my exemption. So there's no payroll tax for employees who care for a person with a physical or mental disability at the home. So you would apply to the tax commissioner for exemption for that. I am a government service provider. Am I correct in understanding self-employed persons paying health insurance, that portion can be deducted from gross wages? I'm a government service provider. Understanding that self-employed persons paying health insurance, that portion can be deducted from gross wages. So as a self-employed person, that's, again, the intent with self-employed is any money that you receive out of your business. So if you set yourself up as an employee, and I know this, again, it's a little bit ridiculous because you've got the both hats, but that your company pays half of your health insurance and you pay the other half, then there wouldn't be any sort of tax on that. But if you are basically, if your company is paying the whole portion for you, then half of that health insurance would be taxable. And I hope I'm answering that question correctly. So if I'm not, please come back and let me help clarify for me. Is there still ER portion relief for retail establishments for January, February, and March? Absolutely, there is. How is payroll tax? Oh, right. So coming back to this question, how is payroll tax calculated for business owners who are not yet drawing a salary from the business? So now hopefully that makes a bit more sense that for self-employed people, if nothing has been paid to the owner, then nothing would be due as tax. And you would still have to, and we'll get to filing and whatnot in a minute, you still have to file a tax return. And so in this instance, you would file a nil return. There have been instances where I've seen when companies have filed more than one nil return, the tax commissioner might reach out and just say, are you still in business? What's happening? You know, what's going on? But you do still need to actually file. I am the sole employee of my company and the cash flow is not constant and therefore my pay isn't. I let the company pay my health insurance, social insurance. I am employer and employee. Yep. Never seem to get it right. Always in trouble. Don't know how to treat the form. So I'm hoping today helps a little bit, and we will offer some further assistance outside of this this webinar. But I just also, I want to sort of sympathize with you guys because this is hard to get right. And, you know, I'm trying to sort of demystify it and break it down in a way that is helpful. But it is a complicated system. And we really, my bigger goal today is to try and equip you with tools so that you can, to help you get it right, or to know who to reach out to if you're struggling. I have a business in the mental health care sector. Is the amount I earn from each client and insurance company what I pay in taxes? Or is the actual monthly salary I pay myself that I pay tax on? I have been in business for a year. It's been very slow, so I was not able to give myself a salary for many months. So, and this actually might answer the other question. I'm not sure that I answered the other question correctly. So in the event that you, and in an ideal world, you have a business account separate from your personal account, and there's those things are set up in a certain way that it makes it easier to recognize when you're actually drawing out of your business. If that is not the case, and so you receive fees into your personal account and whatnot, pretty much what the tax commissioner is going to be looking for you to pay on is the net amount that your business has made. So if you earn $2,000 of fees, and of that you have to pay $500 for materials and I don't know, $100 for your work phone and some other things. The difference, that net income, is then what they would consider your actual owner income. And so again, when things are a bit muddled like that, you want to be able to try and identify what expenses relate to your service offering as well, so that you can get a better idea of what your actual earning is and not be responsible just for paying tax on all the money you earn. If I'm self-employed, do I have to pay both the employer and employee portions or just the employee portions? So as a self-employed person, you are both the employee and the employer, and both of those portions are due. If someone is a part-time independent contractor for an organization making the minimum pay band with a full-time position of employment elsewhere that covers health and social, so that it's just an additional stream of income, is payroll tax still payable in the second stream of income? That is a great question. So, and there's a whole other webinar that I could do about employment benefits. So basically, if you've hired someone and their health and social insurance is being handled elsewhere, that's fine, because so health and social insurance can only happen once. You can only have health insurance in one place. Or, I mean, you can, but why would you? So you only should have health insurance in one place. But payroll tax is a little bit different. Payroll tax is due on all of the income earned. So if I have 4 jobs and I'm working more than the 16 hours mentioned, and I'm not self-employed, and I'm working more than 16 hours mentioned in the first slide, then all of my income, all of that income is going to be taxable to the person paying me. So hopefully that makes sense. If you are a new startup and eligible for the 4-quarter tax exemption, do you apply first to the OTC or BEDC? So as you start your business, you need to register with the OTC. This is a good question. I think the answer is, and if someone from the BEDC is here and knows the answer, I'd be delighted for some assistance. I think the answer is register with the OTC first and then submit your application to the BEDC. But I will ask That is a fantastic question. If you are not making a profit as a self-employed person, do you put your income in deemed employee? So if you're not making any profit at all, and I think this was answered a minute ago, then you would file a no return. So if there's no profit, then there is nothing that you are earning as a business owner. If you have an hourly employee with hours that fluctuate weekly, would their wage be updated on the calculator as a one-time payment? That's also a good question. So no, for wages, even if they change, that are paid on a weekly basis, you would still use those as recurring. In reference to registration, at one point the TC, oh, sorry, I answered that one already. These are all mixed up. I've lost my place. Thank you for bearing with me here, guys. Is there a form? Oh, sorry, I missed one. Sorry. Okay. In the recurring field on the calculator, is that before deductions or after deductions? So should that include health or social? That is a fantastic question, and I'm sorry that I wasn't, that was something I should have mentioned. So the amount that you are putting in the calculator is the gross amount before deductions. So if someone earns $1,000 and then you do deductions, it's the $1,000 that goes into the calculator, not what you physically pay them. Is there a form for the exemption for net new employees, or is it automatic? Also, how long is the remuneration exempt? How many tax period? I'm not seeing reference to the specifics on the OTC website. So the new hire, and I'm using my memory, which as I get older is not my most effective tool. So my remembrance of this was that in order to claim the exemption, you did need to submit support for your baseline employee numbers to the OTC. Now, I don't know what they required for that, whether that's a form or not. So I'd encourage you, if you're in that situation, to reach out to them and understand how you register, how you're able to kind of establish what that baseline is. That's a great question. Is there a manual way to check the calculations? Good God almighty. Yes, yes, and actually, and I'll show you one of the other calculators. There is, it is mighty complicated. I have spent hours kind of creating and recreating a similar sort of calculation. Honestly, the suggestion is, I'd want to understand the why you want to do that. And if it's just for confidence that it's working correctly, I can hand on heart tell you that I've done it 1,000 times and I've not found anything incorrect yet. But if an employee is asking, well, this doesn't make any sense, how does this work? It's quite complicated, because you really do need to kind of almost do what the calculator does, which is list each calculation, multiply it out, figure out what the annual tax is, and then back out the tax that was already deducted. So it really is complicated. Not something I would recommend, but if there's a reason to do it. Oh, well, actually, hold on. Good question. So I wasn't going to go into these other tabs, but there is actually in the calculator another tab here, workings. And if you are Excel oriented, it will kind of work you through how it is coming up with the numbers that it's coming up with. What I will say to you is that there is Excel formulas in here that are magnificent, and I actually met the guy that developed this and treated him like a celebrity. So it is there, like there is the way to kind of step through it. I'm twitching just thinking about trying to do this manually. Is there any reason why employee portion of pension and medical paid by the company would not be a taxable benefit? Is there any reason why employee portion of pension and medical paid by a company would not be a taxable benefit? Isn't there an approved medical pension scheme exemption? Yes, but the approved medical pension scheme is for the employer portion. So if the company has an approved medical or pension scheme, then the employer's portion is not taxable. I know the person that asked this question, and there's someone that I know does a lot of tax, so I'm wondering if I'm answering that question correctly. So if I have not answered that question properly, please let me know, because I feel like there's more to it. So the employee portion is a taxable benefit if it's paid if it's paid by the company, but the employer portion of an approved scheme is not. I got all the tax people in here. This is terrible. Okay, how are self-employed people that are seasonal, such as doing these tours, busy in the summer, huge slowdown in the fall, zero in the winter, pay only happens when there are bookings? So that is a good question. And I think, again, this is where you have to sort of think about the nature of what's being paid, because I think you're asking if that's recurring or one-off. I would consider those one-off. So again, if they're really sporadic payments, then plug them in as one-off payments and then just have the correct calculation. And sorry, so this is actually asking about self-employed businesses. So again, this is speaking to the fluctuation of pay. So if you're self-employed, you're a single person, or if you're not, and you and your people are paid sporadically, from an employee portion calculation, you would use the one-off payment calculation. If your remuneration falls to zero in the winter or COVID or different scenarios, then you would file a nil return. So there wouldn't have been anything paid, and therefore there wouldn't be any tax due. When you receive annual packages, how do you add this for payroll tax? Quarterly, or do I divide it over the year? Annual packages. For annual packages, that I'm assuming that means a bonus. So tax is due when funds are paid. So if there is a bonus paid, the tax on that would be due in the quarter that it's paid. So I hope that makes sense. If the bonus or the package payment or whatever is paid out on a quarterly basis, then that is when it would be included in the tax return on the basis for which it's paid. Online business and tips are taxable. Great question. So if you are so this is a good one, and this might test where I'm feeling qualified to answer. So if you're a Bermuda-based business and you're offering services primarily to Bermuda, because where are the services provided? That's a good question. Which I think in some instances, so let's just think about that for an example. So if there is a business, and I can think of one, but I don't want to call anybody out specifically, but there's a business that operates primarily online, but we know that it is a Bermuda business, it's servicing Bermuda people, then yes, I'm pretty confident that the tax commissioner would consider those services provided in Bermuda and would expect them to file in the same way that kind of a brick and mortar might. Most of the services that I provide now are virtual, so it doesn't change the nature of the service that I'm providing or the people I'm providing it to. But if you are, there may be exceptions to that. So again, if you think you're kind of in an exceptional circumstance, please call the tax commissioner. I don't want to steer anybody wrong. Parched, you guys see it, right? That's a funny comment. This is really helpful. Thank you. To clarify, as a self-employed person, will both components, oh, I think I answered that one already. My apologies. I wonder if they're popping back in. This is crazy. So Dejan, I'm sorry to bother you again, but is there a way to oh, I figured it out. Never mind. I'm a smart girl, you know. I've sorted them by time, so this should help me, but now I'm gonna have to still figure out which ones I've answered and which ones I haven't, which allows me to sit. Okay, so I did miss some. So where do commissions paid to employees fall, and what about tips? So commissions, again, and I think actually I might have sort of answered this with another question. So again, I think if commissions are sporadic, treat them as one-off. If commissions are part of regular compensation, then include them in recurring. Similarly with tips. Which branches get a tax relief because of COVID? Not 100% sure what you mean by branches, but the government has extended restaurant relief, and the upcoming quarter of January to March is retail relief. Trying to think if there was any others, because there was, as you're aware, quite a lot of changes over this last year. I like the comments that say I'm doing a great job. Keep those coming. Why is there such a large jump? This is a great question. Why is there, so this is talking about the employee rates, and I'll just pop this down. Why is there such a large jump between the first band and the second band? I can't answer that. I wasn't consulted on any of this, but what is interesting is if you look on the government website, there's actually a comparison to what it was last year and what it was this year. And what it actually means, as much as it looks like there's a huge jump, because this is a blended rate, and this is so low, everybody benefits from this 2%. So everybody, if you make $95,000, the first portion of that is taxed at 2%, and then the second portion is taxed at 8.5. So it effectively comes back to, it is still higher. So the more you earn, this rate is much higher, but it isn't, you're not taxed at 2% and then 8.5%. You're taxed at 2%, and then for every dollar, there's another incremental amount, which is a very confusing way to explain it. But it isn't, people who are earning $48,000 are not being taxed at 8.5%. There's a blended rate that happens behind the scenes in that calculator that starts very close to 2% and then grows up to 8.5%. Okay, I did that one and that one. That one. Where does one save the calculator? Somewhere. So I don't mean to laugh. So really, I mean, it can be saved anywhere if you have a laptop, or depends on what technology you're using. So if you're using a laptop, save it there. Anything you save on a laptop, please, obviously make sure you're doing backups of things so that you if something happens to your laptop. If you have a more sophisticated system, then save it on your drive, but also be aware that there is going to be confidential payroll information in there. So if you have other people looking at that drive, just have a think about who has access to that. What about seasonal employees who only work 8 months and come back on the new tourism season? The time that they're here would be taxable. And again, if I'm not answering these questions in the way that you want me to, please make sure you ask again. What if, I think I answered that one, sorry. As a self-employed person who works different hours per month, would I use the one-time or recurring column? As if you are consistently getting paid each month, you would still use recurring, even though the amount is fluctuating. Sorry, the BEDC, thank you, Kalina, has come back in and said that with regards to the question on applying for either the new startup exemptions or the EEZ exemptions, Kalina said that you can do them simultaneously, but OTC definitely. So thank you for that. There is a comment that says if there is no profit, there is still tax. If there is no revenue, there is no tax. Okay, so if there's, right. So for a self-employed person, if your business is profitable, there is tax. But if there is no revenue, there is no tax. That's a great point. From another one of my tax pros here. Oh, and actually the BDC, Eureka, who I'm delighted is here, says actually on the BDC's new startup payroll tax relief, it's preferable they register with the OTC first to get their tax ID number and then submit an application to the BDC. Or if they haven't, if they haven't done that, we have them and can submit both places concurrently. That's hugely helpful. Thank you. Is health insurance and pension exempt? So just to go over this one more time. So health insurance and pension, if your company is paying health insurance or pension on behalf of yourself or your employees. Let me be very clear on what I'm saying here. So, and you are able as an employer to withhold half of the premium for health insurance, half of 5% for pension, half for social insurance. If you as an employer decide to pay the employee's portion, that portion that you're paying on that behalf is taxable. The employer portion of that is not taxable. For self-employed persons, do you use the regular PT weekly, monthly calculators or the individual calculator? So that is also a great question. I use the frequency calculator. So that's, and actually this is a good point for me to knit back over to the website. So there is another calculator called the individual calculator. Oh my gosh, I'm so conscious of time. Sorry. We haven't even got to the portal yet. Okay. So the employee calculator, or the employee portion for an individual, you can also use this and it functions very similarly. I, again, personally, and I'm probably making it more complicated, but I actually find it useful if you are paying yourself on a regular basis to use the frequency calculator, however frequently you're paying yourself. Gosh, sorry, and I'm just going to try and zoom through and make sure. Who knew that tax could make the time go so fast? Is there a calculator for charities or the company exempt from payroll tax? So the exemptions for charities is only the employer portion. So you would still use these calculators for the employee calculation. What it does mean though is then when you actually do the return, which is what I'm going to zoom through now, and thank you for everybody who's stuck with us here. On the portal, the Office of the Tax Commissioner would already have that entity registered as a charity. So the the employer portion would already be listed as 0. So the only portion that you would be submitting onto the Tax Commissioner is the employee portion. Sorry, payroll tax is mind-blowing and you're doing great. Thank you. Thank you, thank you. Is it possible to alternate between e-tax filing and manual filing? Actually, great question, thank you. So yes, you can. I am a huge proponent of the e-tax filing system, which is why I'm going to show you the portal. But the other thing is that the form looks just like it does on the portal, so it also gives us the same basic fields to fill out. The reason why I'm a proponent of the e-tax portal, well, there's a few reasons. One, it really helps you with the calculation. So instead of having to transpose your numbers from one place to the other and making sure you're carrying the 1 and dividing by the 4 and doing all those things, it actually does a lot of the calculations for you behind the scenes. It also has some check features, so it makes sure that you're putting, if it needs another piece of information, it's actually asking you for it right at the point of time. From a slightly selfish perspective is when the changes are rolled out, it is often that the portal is not always ready. So sometimes there's often a concession made for when the payments are due. So there sometimes has been the ability to have a little bit of extra cash flow while the portal is getting updated. So just a little tip there. So now my ego, everybody's telling me what a great job I did. Okay, so I'm not going to get distracted by that. What I am going to do is go back to my presentation. We are going to finish this. So calculators. Can't tell you enough how exciting they make tax. Not true, but they do make it easier. So just flipping attention to the tax portal. So if you have your tax ID already, all you need to do, you're going to go to the e-tax government link here. You're going to put your account number, which is your tax ID number, into this field, and then you're going to hit register. This then submit your information into the Office of the Tax Commissioner, and they will usually come back to you with log-on information within a day or so, which I think it asks you for another piece of information. It might ask you for an email address. So I think there's an additional screen, but it is that easy. It's put in your account number, hit register, you're then registered. However, there is a second step that also requires you to register for e-payment. Oh, sorry, and somebody's just missed. I'm going to try not to look at the questions except for when made mention around certain tax bands that must file on the portal. That is true, and I think that we're going to see that there is an increasing push towards getting people to e-file. So if you are in a band, and I think it's over 500,000, you are required to file online. So you've registered, you've gotten your logon information, and you're saying, okay, great. Now I need to actually provide them with information that allows me to pay my tax online. What you're going to do is once you've gotten your logon information, on this screen, you're going to go in here, you're going to put your tax ID number here, and you're going to put your password that they've provided you and click login. You're then going to come right down here to this payroll tax EFT authorization form. You're going to download that form and resubmit this back to the Office of the Tax Commissioner. This form basically says, I allow the tax commissioner to deduct funds from my bank account, and you tell them what bank account it is, and you sign off, and it has to be done by a signatory on your account. To be very, very clear, it does not allow them to just go take money. What it does is it allows them, once you step through the tax filing process and you say, I want to e-file, and then you say, yes, I'm sure, you actually have to re-enter all of your information before it will go and take that money. So for people who have been concerned about the government going and taking money out of their account, that's not what this authorizes them to do. You still have to actually physically go through the process of clicking the buttons to file. So once you're registered for e-filing, you're ready to start using the portal. And so the way and this is actually a screenshot right off of the tax portal. The navigation, these are little menus. So there's payroll tax return, which gets you into a new return. View returns, which I think is fantastic. So all of your previous returns that you filed, you can go and see them. So the whole notion of having to print them and copy them and store them is done. You can actually go right back into your returns. It has the receipt number on them. It's fantastic. Payment on account. So if you are in arrears and you're making payments, you can do that directly from here too. User maintenance is where you set your default information. You can change your passwords, etc. So that's what this is. So when we're entering a new return, and you've clicked the other fancy red arrow here, the payroll tax return, it'll take you to some question screens. The answers that you give in these screens will impact the way the portal guides you from there. So, and the answers are going to change depending on what your particular situation is. So if you're an employee with a business with employees only, are you a business with self-employed and deemed employees only? So if it's just you and you're the owner, that's where you're going to fall. Both employees and self-employed, and then no employees and reporting dividends only. So really just figure out what your circumstance is, because it'll change what screens show in the next section. Do you have employees earning in excess of 900,000? Yes or no? Do you have employees in special situations? And so this is stuff like some of the exemptions that aren't set. So the retail exemption, the tax commissioner has you registered as retail, and you kind of, it already know. Actually, that's a good one, because retail between January and March has employees in special situations. That tax is exempt in that period. So you would actually say yes here. What other special situations? So caretakers, again, the idea also is, even if you are zero, and I think I spoke to this a minute ago with the charity, if you are zero employer base, your employees are still, the amount paid to employees is still taxed, the employee portion, thank you, is still taxable. So you still need to do a return. The tax commissioner has given us guidance that what they want us to do, and I'm going to slow down because people can stay as long as they can stay. I'm going to get through this clearly. The guidance the tax commissioner has given us is that they want you to file the return as if that exemption wasn't there. So for a retail company, you're still going to put in your full remuneration. But what they will then do is say, okay, of this full remuneration, this piece is not taxable. But they still want you to file the return at the total amount. Employees on approved training schemes, again, that's a very specific situation. What tax period are you filing for? And then what is your remuneration for the quarter? And again, what you choose here will set the calculation in the next screen, but it also is a double check. So if you on this screen say that your remuneration is between 50 and 87.5, and you get to the next screen and you actually enter 100,000, it's going to give you an error. So it's doing some quality checking along the way as it's going. And then how often are your employees paid and what was the date of your last payday? And then you click next. So this then is what the portal looks like, and it actually is an exact mirror of what the manual form looks like. So section A, you are going to enter, and this is also where, if you've been using the calculator, pull that out, because it'll give you your totals. So it'll help significantly. How many, we're going to continue with our example of weekly paid. How many people did you pay in that quarter? This number, the number that you put here, has to equal, oops. Sorry guys, give me one sec. Why would I have closed that? Library. So the information that we put into the calculator, and I'm just gonna, for argument's sake, I'm gonna change this back just so it displays properly. Quarterly output. So pretending that this is the right quarter, we are reporting for 3 employees. So if one of them is an owner, you don't include them here. I almost want to do this backwards. I'm going to do this backwards. So in section B, if you have a self-employed person or an owner who's included in your calculation, you need to have them here. So you would have one person here and the amount they were paid. The difference then is what you would include over here in your number of people. And it breaks it down by the different components. So salaries, wages, commissions, bonuses, and then these are the fees to directors and entertainers, and then these benefits. So where we were talking about employee deductions paid by employer, this is where you would include that. And again, you just want to have a think around things that are paid on behalf of the employee. So if you own a restaurant and you're providing food, technically that's taxable. If you have a housing allowance, that's taxable. So anything that you're paying to or on behalf of your employees is taxable. Okay, so we're gonna enter the information here. This part is only for the Office of the Tax Commissioner, so you ignore this. So this is the actual amount that was paid to you as a self-employed person, or the profit that was that remained from your self-employment, if you will. So going back to the point around the profit versus the fees. If you got paid $1,000, but you had to pay out 500 of it to business expenses, you only earned as a self-employed person $500. And the dividend section. So this is also important. So a dividend is not just money that a owner has taken from the business. It is something that is declared by resolution from a registered, either an LTD or an LLC. So if you are, as a business owner, just taking money out of the company, that's called an owner draw, and that would be included in your remuneration. If you officially declare dividends by resolution, you will include them here. And why that's important is that $10,000 exemption that we were talking about. This is where you can pick it up. That $10,000 can be picked up in any quarter, and any quarter of the year you can pick up. So if you declare a $2,000 dividend in Q1, you can pick up $2,000 of it for exemption. If you declare a $10,000 dividend in Q1, you can pick up $2,000 of it. So you can really kind of manage your cash flow accordingly, but you only get $10,000 per year per shareholder as an exemption. And then, and I'm just going to pull something up on my other screen because the sun is killing me right now. Section K is where, because remuneration not taxable to the employee. So if you did have, for whatever reason, the employees, like people, caretakers, that gets included here. Now, again, the screen changes slightly depending on what selections were made on the first 2 screens. So I'm hoping I captured everything. And then this section L is the employee portion. So this is then this little box, if you guys remember, looks just like this little box. So if you've done this calculator along the way throughout the quarter, you are literally just transposing the information from here into the portal, and you're not quite done, but you're almost done. More significantly done than if you hadn't done it. Little trick, or I don't know if it's a trick, but just to be aware, when you put information into this line, the portal is looking for this number because this is that lowest tax rate. It's actually saying, okay, I'm expecting this number to be this number, or sorry, the employee portion to be 2% of the number of the remuneration that you entered in this field. There are times where the calculator has rounded differently and you're going to be out by a couple of cents. You're going to get an error on the portal. So what I've done is just adjusted that line by the couple of cents that I'm out and included in the line below. So you're still paying the same amount of tax, but it just fixes the little error that you're going to get. So just trying to think if I'm being clear enough here, and you guys are going to let me know in the comments if you're not, and if you want me to go back over anything. Section O, then this doesn't form, there's one field on here that forms the basis of the calculation, but most of this is just informational to the Office of the Tax Commissioner. So it's asking you things like, what did you pay for pensions on behalf, what was your employer portion of pension? What was student remuneration? So if you did have a student that was tax exempt based on the definitions we talked about earlier, you would include that amount here, et cetera. The payroll tax withheld by an employee should be literally what you withheld from your staff. And then, sorry, this is the field I wanted to just show you. Gross remuneration not subject to employer portion of payroll tax. So if you have those employer exemptions for you as a restaurant, you as a retail organization, you for whatever exemption you have, this is where you would put in the amount that is not subject to tax. So if you as a restaurant, I'm just going to try and make this basic. If you as a restaurant had $10,000 of remuneration, let's make it 20 because I don't want to confuse it with a dividend amount. You had $20,000 of remuneration and your employer portion is tax exempt, then you would put in 20,000 here so that when we get to the next screen, it'll calculate it at 0. What I will tell you is that if you are not registered properly with the tax commissioner, it will not allow you to do that. So if you are not registered as a restaurant or a retail organization or any of the other exemptions, and they haven't gotten you registered correctly on the portal, it will not just let you put funds in there and file at 0 if that's not a legitimate thing. Once you've gotten to this section and you hit next, what it does is it goes in quality checks. And so if everything that you've put in is perfect, it will take you to a screen that just shows you your tax return. If the number of weekly people or the number of employees that you have here does not match the number of employees you have here, you're going to get an error. If the total remuneration that you've entered here and here doesn't total over here, you're going to get an error. If you told it on screen 1 that your band is this, and you get over here and you're in a different band, you're going to get an error. But it tells you what the error is and it tells you what section it's in. So it's a little bit frustrating. And sorry, I'm just getting a wrap-up note, and you're exactly right. We're right at the end, so I'm just going to zoom through this. But so if you've gone through that exercise and you're getting an error message, just have a look at what it says and go back to the portal and just fix it. These are then the payment screens where you are able to tell the tax commissioner what you're paying. And this is where I was saying you still have to specify how you're paying, bank account, credit card, et cetera, and what bank account number you're using. If the bank account number that you put here does not match the form that you've submitted, it won't let you do it. So it is very specific, and it won't let you go any further. Finally, I just want to mention late filing penalty. So if you don't file your tax return, there's a 30% penalty applied to your account plus interest. If you file, if you don't have the cash and you file but you're not able to pay, that penalty goes down to 10% plus interest. So there's a huge difference, and we really want to make sure that you're getting your filings in to avoid that. I have also found the Office of the Tax Commissioner to be really, again, they're interested in getting it right. So if you need to set up a payment plan, contact them and talk to them. And that's where we'll land here is the assistance available, the Office of the Tax Commissioner's contact information, BDC's contact information, and our contact information. I am offering 1-hour consultations next week on the mornings of 11th, 13th, and the 14th. There are 6 slots left, and they are going to be booked on a first come, first paid basis because that's smart business. I am going to go back through the questions and see if there's anything that I can answer via email, and maybe we can get that sent out. I really appreciate you guys coming. Hopefully your mouth is not as dry as mine is because this material is pretty dry. How do I do this? My phone. We're going to ignore that. But yeah, so I'm really appreciative. I also just wanted to say thank you to the BEDC. They really, they work so hard in support of local business, and I'm just so appreciative of everything that they do on and behalf of small business in Bermuda. So thank you, and good luck with payroll tax, and please reach out for help if you need it.